Hey guys, this is Tom Sullivan with Real Talk Investing. And before you click off this video because it looks like I'm filming in my parents' basement, let me tell you something. I am. I'll let that stop you from watching this video because I got a couple of stocks that I think are going to explode over the next year just from doing some due diligence on different things that these stocks bring to the table and seeing that they are completely undervalued. You think this? It's just from looking at some of the numbers and seeing how big these different areas of business are growing. So as you've seen with the stock market already, we have seen exponential growth over the past year, seeing plenty of people that have hit 100% plus returns in a single year due to the market crashing and now continuing to explode. But with that, there are some businesses that are either lagging behind or still have a lot of room for growth over the long term, and there's certainly companies that should be looked at as we move into 2021. And to start off with the first one has to do with online gaming and streaming for a different platform for people to be able to watch other people as they play. And it's very similar to Twitch, what we see in the United States. And this company is Huya. Some people, they do not like when they hear that it's a Chinese company that we're investing in. As you have seen recently with the market, some of the Chinese companies have started to see a decrease in their price. And some of that has been seen with different regulations that are potentially being put in place or have already been put in place for these Chinese companies. But I think Huya's got a very strong future. So let me tell you about why I think that and where I see that price going over the next year. In China, esports is huge, as I'm sure many of you are already aware. With the esports that we're currently seeing, it's estimated that in 2022, so about 2 years from now, we could see over 500 million people that are involved with the esports community over in China. So that is a huge population, bigger than what we have in the United States, focused in on esports and the growth of that industry. So that alone right there is a specific point to see how is this company going to go in the future and grow as we move forward. And esports is going to be a vital area for people to have their entertainment moving forward. And it's now starting to move more into that sports spectrum where a lot of people are watching that for the competition of it, watching virtual tournaments online. And I continue to think that that will grow over the next year and then over the next 5+ years. From a stock market perspective, it has been going up and down, fluctuating around that $20-$25 mark for quite some time. However, I think we're finally getting to that point where it will start to take off. So we've seen a high since it first came out from IPO of about $45, and that number was quickly de-escalated down to the average that we've been seeing between that $20 to $25 range. But from the growth that we have seen so far, as seen from some of the numbers this year, with a PE ratio sitting at 42, I think there is plenty of opportunity for this stock to continue to grow and this company to continue to grow. And from that, I expect to see these numbers to continue to rise and start hitting into like a $30 to $40 range by the end of 2021. There are some things that we do have to keep an eye on. So right now, Huya is looking to have a merger with Duyo, which is their competitor over in China. So if this merger does go through, the majority of the esports population will be using this platform in order to watch their esports. And if that happens, they'll pretty much have a hold on the entire market. So if they're able to achieve that and this goes through, which as of right now, it's looking like all signs are pointing that way, I expect to continue to see this company grow in the long term. Number two, we are looking at Rocket Mortgage. So the Rocket company, RKT is the stock symbol. As I'm sure you've seen all over the internet, they're shooting up like a rocket, or that was the plan when we first came to IPO. And in September, we started to see those hopes. It was starting to rise up into the 30s. And unfortunately, the rocket crashed. So we've been sitting at around $20 per share for quite some time now. But I think as we move into this new year and are starting to see some of those earnings come out, I believe that this company has plenty of room to grow. Put some numbers to Rocket Company's performance. In Q3, they originated $89 billion in mortgages. And from that, saw a net income of about $3 billion. So for this company, in one quarter, they were able to generate $3 billion of net income. So this is profit that they're seeing in one specific quarter. Now, the one watch out is that that quarter was a very, very strong quarter for real estate overall. So with COVID blocking out the first half of the year and a lot of businesses having to either shut down or house sales significantly dropped. After that, we did see an increase in the number of home purchases and home sales, which greatly helped the company. However, I think that that is going to continue through 2021, and I think they got some great plans in place, whether it be through different technologies or different partnerships that they are currently working on, and hopefully we'll have some announcements come the next earnings on what they plan to do going forward. But from that alone, I think this company is set for strong growth over the next year as they continue to develop these new technologies to implement into their company. And one idea with the company is with Rocket Mortgages, right now they are known to be able to have the quickest mortgages, able to get a person approved and get them their money so they could purchase their house extremely quick. What they're going to continue to work on is trying to make that process even quicker and hopefully eventually getting to the point where it's a touch of a button, set it on your phone, and you're able to get that ball rolling and get that mortgage set up for you pretty quickly and relatively easy. So if they're able to start implementing some of these processes, streamline the way of getting mortgages even more and more people will flock to the company. They're already building an extremely strong brand name. Look at any sports channel, look at any sports team, you see Rocket Company, Rocket Mortgage advertisements all over the place. And a company would not be advertising that much if they were not making strong revenue with a lot of profits. Because if they didn't have the money, they would not be able to advertise. And certainly Rocket Mortgage and Rocket Company has that money available and is utilizing it to help build the company and help get more individuals to use their mortgage services. Lastly, company 3 that we're going to be talking about is Alibaba. So Baba stock, BABA, which I'm sure a majority, if not all of you, are very aware of and have seen through whether it's online making purchases or through different drop shipping methods going through Amazon. There are plenty of avenues for Alibaba to create wealth, and they've been doing an excellent job at building their company and getting into different technologies. However, if you have been following the company recently, there has been a little bit of a dispute with China and the executives. So between that, we have seen the stock crash, essentially going from $310 down to about $220, seeing almost a 30% hit to the company. However, at this point, depending on where all these regulations go and what changes are made, I think that this company can hold strong and will be successful at regaining that pathway that they had, that ownership that they had, and their market share. So I don't see that being lost. I think that it's the big company of China, so China is not going to let them fail. So I think this was just more of a bump in the road, make sure that they're doing everything right, and then back to business. So at this point, I think we will see that price start to push back towards the $300 mark. It will depend on where all these regulations go and where everything falls into play. But I think right now where we're seeing about that 220, 230 range, hopefully that holds as the bottom, and it's all uphill from here. So we'll continue to keep an eye on it, but I believe that this company is very strong. It is the Amazon of China, but is trading significantly lower than Amazon. So I think there is plenty of room for growth for that company in the long term. Three of the companies that I have personally invested in and will be keeping an eye on as we go through 2021, and hope to see a significant return on those. Hopefully starting to see 50% to maybe even 100% returns, because I think the at least Huya and Rocket has that potential. While Alibaba, I certainly don't see it jumping that much this year. I think there is certainly upside after it taking that significant dip and crash recently over the past couple of weeks. But those are just my thoughts on those three companies. I think that they will be good buys in the long term, but I'd certainly be interested in hearing your thoughts and what you think of not only those companies, but what are your companies that you're going to be watching out for? What stocks are you purchasing as we move through 2021? That, thank you for jumping on this video. Really appreciate you taking the time to listen to my thoughts on these few companies here that I'll be continuing to focus on. And as always, if you have any questions, feel free to reach out. Certainly subscribe to the channel, as I'll be continuing to put out different videos on my thoughts on stocks or real estate investments, or just trying to figure out how to get your money right so in the long term you'll be able to retire as a millionaire. So thanks again, and look forward to seeing you next time.